Is there only a few days of pain left in the stock market? Or will the next year be full of difficulties? Expert opinion. Hello, friends. Can you think that this continuous decline of the stock market is just a guest of few days? Are the bad days of investors really going to end now? Or is it just an illusion which will soon be broken? For the last few months, the slowdown in the stock market has kept investors awake. One day the market is stable, then the next day it again declines. The question in the mind of every investor is that when will this bad period end? Meanwhile, Samir Arora, founder of Helios Capital, has made a big prediction. He says that in the next 1 to 2 months, the market will be bottomed out. That is, the decline of the market will end. After this, the market can see an increase of 5 to 10%. But is it just a hope, or is there any solid foundation behind it? On the other hand, Shankar Sharma, founder of GQuant Investec, has completely rejected this prediction. He has claimed that this decline of the market may continue for the next 4 to 5 years. After all, what is the truth? Samir Arora's hope or Shankar Sharma's bitter truth? Today, we will discuss this topic in depth. But before that, if you are new to our channel, please don't forget to subscribe to the channel so that you will be the first to get our new video updates. So let's start today's discussion without any delay. Samir Arora believes that due to the sale of foreign institutional investors, FII, the market is witnessing a decline. FIIs have been withdrawing money from the Indian stock market continuously for the past few months. This has a direct impact on the market. If the flow of investment in the market decreases, then the result is clearly seen as a decline. Samir Arora says that in the next 1 to 2 months, the fall in the market will be completed. After this, the market will recover and you will see an increase of 5 to 10%. But this acceleration will only be a temporary relief. Samir Arora has also clarified that despite this growth, the market will not reach the level from where the bull market started. The beginning of the bull market is generally considered to be from 2020. That is, even if the market rises by 5 to 10%, it will not reach the level from where the boom started. This means that investors have to be careful before expecting a big boom. But on the other hand, Shankar Sharma's view is completely opposite. Shankar Sharma has said that this claim of Samir Arora may be proved wrong, that the market will bottom out in the next 1 to 2 months. He says that it may take 4 to 5 years for the market to improve. According to Shankar Sharma, the period of decline which has started from the month of September 2023 may continue for the next 4 to 5 years. Shankar Sharma has also said that during this time, there will not be any movement in the market. He has warned that if India's GDP figures are bad or if there is any major event in the global market, the Sensex may fall from 73,000 to 60,000. However, even after this, the market may rise again to reach 75,000. But this does not mean that there will be any permanent improvement in the market. Shankar Sharma says that during this period, the interest of investors will remain in the market, but the expectation of positive returns is low. He believes that the possibility of positive returns from the market within the next 5 years is extremely low. He even said that the Indian stock market can give negative returns in dollar terms. This means that the coming years may also be full of challenges for Indian investors. There is definitely a hope in Samir Arora's words. He believes that the decline of the market is now in its final stage. If the market bottoms out in the next 1 to 2 months, it may be a good sign for investors. But there is no possibility of getting any big benefit from this acceleration. Even if there is an increase of 5 to 10%, the market will not reach the levels from which the bullish period started in 2020. At the same time, there is a glimpse of reality in Shankar Sharma's words. The way he has analyzed the global economic conditions and the past performance of the market, it can be assumed that it will not be right to expect a permanent improvement in the market. If the global economy improves, the market will definitely rise. But if the slowdown in the global economy continues, it will take time for the Indian market to recover. Apart from this, the role of foreign institutional investors is also important. If foreign investors continue to withdraw money from the Indian market, the chances of the market booming will be less. If foreign investors start investing in the Indian market again, then the market can be strengthened. Apart from this, another major challenge for the Indian market could be interest rates. Interest rates in the US and Europe are steadily rising. If the US Federal Reserve raises interest rates further, it will have a direct impact on the Indian market. Due to this, the money of foreign investors may come out of the Indian market so that the period of decline in the market may start again. Considering the current situation of the market, investors need to be patient. If Samir Arora's story is true, then the market may recover in the next 1 to 2 months. But if Shankar Sharma's words prove to be true, then investors may have to wait for a long time. Samir Arora and Shankar Sharma, both are veteran investors. They have years of experience and understand the ups and downs of the market intimately. In this case, it can be challenging for investors to know who to trust. Before making investment decisions in the market, it is important for investors to pay attention to their risk capacity and long-term goals. The conclusion of this whole controversy is that the possibility of a permanent improvement in the market is still weak. Even if there is a 5 to 10% rise in the market in the next 1 to 2 months, it is unlikely to last for a long time. If the global economy and interest rates stabilize, then the market may rise. But if the global conditions deteriorate, the period of decline in the market may continue for the next 4 to 5 years. It is time for investors to be cautious. It is important to keep an eye on the ups and downs of the market. If you are a long-term investor, be patient. If you are a short-term investor, don't miss every opportunity to take profit. Because the future of the market is still uncertain and its direction will be determined by the global economy, interest rates, and foreign investors. If you like our content and want to make our efforts even stronger, you can support us through the QR code given in the video or the UPI ID given in the description. Your every small contribution is valuable to us and will inspire us to make even better and informative videos. Your support is our strength. Also, if this video taught you something new or you felt that this information should reach others as well, then do not forget to like and share the video. If you have any questions or suggestions in mind, then do let us know in the comments. We look forward to answering your every question and listening to suggestions. And yes, if you want to stay updated with our every new video in the future, then subscribe to the channel and press the bell icon so that you get every new information first. GRT Business always strives to give you accurate and reliable information. Our news is obtained from various news agencies, public opinion, and public sources. We try our best to verify every report, but we are not responsible for any dispute or error. Our sole aim is to provide you with accurate and reliable information.